check out this strategy. It's a very easy strategy, and let's get into the indicators. This is NASDAQ, and this is a 10-minute chart. Why a 10-minute chart? I just do like a 10-minute chart. It slows things down and allows the indicators just to look a bit better, and also price action. It's not always the case though. You're going to get a lot of crap in here at times. Okay, so let's break it down. On the chart, I have a 5 and a 20 EMA. The 5 is the blue, and the 20 is the purple. Down below, I have a MACD, which is set at 8, 20, and 5. Okay, 8, 20, and 5. You don't have to have the MACD. It's not really necessary, but I'm just going to keep it here. The 20 EMA corresponds with the 0 line on the MACD. So when price is below the 20 EMA on the chart, we want to see the blue line, the MACD line, also below the 0 line, and that's officially saying, well, we're in short territory. It's the same when we're looking for longs. We want to see the blue line, the MACD line, above the 0 line, okay, and also above its signal line, okay. And down below is the good old CCI set at 20, and there's a moving average attached to this. You don't have to have it. The moving average is set at 14, okay. This is trading view, and that's it. Oh, just on the MACD, I've turned off the histogram. I don't like it. It does my head in. Simple as that. Now, the strategy. We have a 5 and a 20 EMA. I've actually borrowed this concept from Richard Donchian. It's just a good old, favourite, fairly easy strategy. If the 5's above the 20, go long. If the 5's below the 20, go short. That's kind of it. However, you can get yourself into a little bit of trouble just by doing that. Like, especially in here where it's a lot of consolidation. You'd be going, okay, well, it looks like the 5's below. I think it's below. Or here it's below, I think. You know what I mean? And the MACD saying it's below and all this and all that. Well, there's another way that can help us filter out some of the bad trades. And this is a breakout strategy. And let's get into it. I'm just not going to cherry pick. I'm just going to stay here. Okay, here we go. The CCI, I'm going to try and make that a bit bigger. The CCI was made by Donald Lambert, and I have made videos on this before. He suggested the only trades you should take is when the CCI line breaks out from the channel. Okay, I think that's a standard deviation. So when it breaks out, it's one standard deviation from the zero line of the CCI. Okay, so you could even look at it like this: that the 0 line of the CCI is also the 20 EMA. Okay. It's approximate. It's not exact, but it's approximate. And also for shorts, we're looking at the minus 100 here, or below the channel when it breaks out there. That's also a standard deviation, and we want to go short. To take shorts and longs, we want to see the breakout of the channel. It's as simple as that. Okay. When you see these, I'm going to call them shark fins. When you see it break out, that is where you're going short or long. Everything else in between is just noise. Okay, all just noise. So I'm just going to go back actually to last night in the NQ, the NASDAQ 10-minute chart. And so where's our trades? We're looking at green, grey and pink. Green is the UK, and grey is the crossover of the UK into the USA, and pink is the USA. Blue is the Asia session. Okay, so I just want to look at the UK through to the USA session and see if we can pick up some trades. Right here there was a trade. So when we start to see this break out of the channel, and there's numbers up here on the left hand side of the CCI that can help you, we also want to make sure that the MACD is above the signal line, and price is up and near the 20 EMA, and of course the 5 is crossing over. When we have all of this together, that it doesn't get any better. You enter the trade and you take it as long as you can. Where would you get out? I would definitely get out perhaps when the MACD is coming back on itself, coming back through the signal line, or the CCI is come back into the channel. Okay, that's your exit, which would have been maybe there. Okay, this is scalping, right? We're not sitting in these trades for hours. You could go to a higher time frame, but I like to scalp. If I made that every day, 71 cents on NASDAQ, I'm finished for the day. Okay, you're generally going to get 1, 2, or a few more trades trading this. The problem is you do need to sit at the charts. So if you like sitting at charts, this is ideal for you. Here was one here, but we wouldn't have taken this. Why? Because the MACD is under the signal line. Okay, so this is why we have the MACD here, just to help us filter out some of the trades also. You can see here it's come out, the MACD is crossing over, and of course the EMAs are there as well. So there's that trade. Then the thing turned around, and you can see around about here we may have entered in there somewhere in there. Okay, always, if you're in doubt, just try and enter as high as you can. Don't enter at the bottom of these bars, because you're just setting yourself up for failure. Okay, you want to try and enter as high as you can. There's a little bit of predictive nature in all of this, and that's just years of trading. Okay, there was another one here. You can see the MACD's turned over. You can see the 5 EMAs above the 20. You know, they're really strong signals, and it just, you can see the CCI is just pushing through the standard deviation, and it's just come up for a small scalp. Essentially, that is the strategy. It doesn't get any more complicated than that. I'll just find somewhere. I have no idea. I'm just zooming in somewhere. Okay, I want to find somewhere that looks really bad here. This looks really bad. Let's just see if there's anything in here. Well, at the start of the UK session there was an absolute ripper here. So if you're at the charts, I would have been, take that and just pack up for the day. Here was one here. Nice looking trade. Everything's in sync. Yep. And there's another one here, which would have been just before the open of the NASDAQ. There was one here. You might have caught that for a little bit. And generally you might see, as soon as it comes up, it might come back down. There was a little one there. You may have got that. I would have seen this turnover. The 5s just cross through, and you know, scalping. We're scalping, man. And then look, see just here. Look at the left-hand side. You can see the numbers. It's gone over 100. Just another thing too with the CCI, it's above the 0 line, the center of this channel, and it's also above its moving average. That is also a very strong signal to help you gauge entries. Okay, as you become more experienced with all of this, you may, I don't want to say gamble, you may take liberties to take these trades where it's crossing over through the 0 line and through this EMA of the CCI. Okay, just make sure the MACD and also the EMAs on the chart are doing their thing. Okay, and you might just notice I'm just sort of saying that's where we entered, and I'll just go there somewhere. I'm not. Everyone has their different risk tolerances for trading. You know, for some people they just might go, you know what, all I want is 20 points on the NASDAQ and stop there. There's nothing wrong with that. You do 2 or 3 of those a day, and I guarantee you will come out in front, so long as you don't have too many losses. You know, but if you're in a trade, you might as well stay with it until it comes, you know, until it comes back on you somehow. Where would you put your stop? Well, I would always recommend perhaps the bar that you've entered on would be a good place. You know, just if I've entered on this bar, I just put it there somewhere. You know, it's this is what I mean by risk tolerance. Everyone has a different vibe on it all. You know, some people might go, you know what, I can risk, if I entered here, I could risk 100 points. I don't care. So they might put it down here somewhere, you know, and let the market run. I mean, I just don't know. And look, that's it. it's just a really simple, basic strategy that maybe will work more often than not. Sorry, I'm just what I want to do is just clear it, and let me just actually go back to, we are here. Let me just put let's just say a 5-minute chart, and as you can see, it just behaves exactly the same way on the smaller time frames, except you're going to get a lot more. Okay, and you just got to be careful because a lot of these fakes are fake outs, little fake outs here. That's why I sort of tend to stick with the higher time frames. I'll even go down to a 1 minute, and this is still NASDAQ from Friday, and you can just see how many scalping opportunities they were. If you're going to do the smaller time frames, I would maybe look at putting just a higher EMA in there. Maybe you could put a 50 in there or something. I don't know, I'm just making this up. We only take these signals if everything's above the 50, and we only take these signals short when it's below the 50. Some people like a 200. I'm talking, this is a 1 minute chart, by the way. That might help you with sort of not taking too many shitty trades the other way of the EMA. Only you can gauge that. Let me just go up to a 1 hour, and this is where it can really shine in the higher time frames. Let me just get rid of that 200 because we don't really need it. So it's just the same principle, like for shorts, you want to see the 5 below the 20, and the MACD, below that, and that's your entry here. Okay. Same thing, exactly the same thing. We're coming up here, so there's nothing for 8 hours there. Something in there. You're generally going to get something per day. Look at this right now. I wish I had opened the charts on the 1 hour. I could have, this is the Asia session. I'm based in Vietnam. Look, I could have made 138 points and perhaps still in this trade. Anyway, go and back test it. You may have a better way of doing this, but I've been watching this for a long time and actually have traded it live a lot, and it's fun to do, and it can certainly put you in the right direction on the right side of the trade. Okay, catch you later.